patience in regards to this market. I think it's important, but when we're talking about patience, it's more like patience for getting gains, right? That does not mean patience in terms of, if you see a great stock that's a buying opportunity, should you be buying that stock? The answer is yes. You should. If there's a great opportunity you see in the market, you should be pouncing on that and not trying to hope, well, maybe it goes down another 3%, 5%, whatever. If you see a great opportunity that it's very undervalued, great pricing, take advantage of that. Heck, if it goes down more, you can always take advantage and buy more shares, right? So, but yeah, in terms of gains, we had a hell of a first half of the year, man. We stole a lot of gains from the second half of the year. You just got to understand that's the way it works sometimes. Like, this happens in stocks all the time where if it goes on a massive run, it's stealing gains from the future. If NVIDIA ran to a $5 trillion market cap over the next year, it just stole a massive amount of gains from the future, right? NVIDIA's first half of the year run to 400, that stole a lot of gains from the second half of the year, right? So you just got to understand this is the way the market works. This is the way stocks work. Sometimes they're going to get, go through a period where it's just blowing your mind. And it seems like every day you open your brokerage account, and it's another $1,000, $10,000, another $100,000. It's just like day after day after day. And in certain time periods when it's like, is this account balance changed in like the last 6 months? Like, that's the market for you, man. It would be cool if it just gradually went up. Everything gradually went up. It doesn't work that way, man. But that's what gives you great arbitrage as an individual stock picker, because you get these stocks at tremendous discounts sometimes that you're just like, are you kidding me? Like, this stock's trading at this price. Or you get some very overvalued stocks, and sometimes you're able to take some of those profits if you don't see much upside. This year is setting up for an interesting potential Santa Claus rally. And the reason being is the first half of the year caught so many folks off guard with kind of the performance there that you could get some real chase into the very end of the year. With that being said, September, October is kind of a wild card. Now, the interesting thing I think on the unemployment front is, and with the employment picture, is usually is September, October, November into December usually have very strong hiring numbers. And it's because a lot of the retailers hire up like crazy going into holiday season, right? Well, this is a very interesting year because a lot of the retailers are not in a very strong position. So I don't know if they're really going to do that hiring. Now, you may say, oh, that could be really bad. That could be really bad for the stock market. That could get everybody scared about recession. Oh my gosh, look at the hiring numbers are the weakest we've seen since, who knows, 08, 09, whatever they say, if that even happened, right? Let's say it happened. Well, you know what you could look at on the flip side, and you could turn that into, this is actually great news? How do you do that? You do that by saying, look, the employment picture is clearly weakening. This gives the Fed room to lower rates in 2024 because the employment picture is troubling. Look at hardly anybody's even hiring going into holiday season, which clearly means the employment picture is not strong like it was a year ago or 18 months ago. And so the Fed can go ahead and move rates down. And obviously the market's been waiting for this whole move the rates down narrative, right? So that's just something intriguing out there that, once again, you can look at a lot of these things and flip bad things into good things and flip good things into bad things, depending upon what perspective you have in the market. And the more you're in the market over time, the more you realize how well you can kind of play both sides if you want. In terms of big tech stocks, I think a couple of big tech stocks still have big runs to make toward the end of this year. So I believe personally that Meta probably has another run to make at the end of this year. It's hard for me to see Meta ending the year under 300. It's a possibility, but I think we're going 300 plus. I'm just really questioning, are we going 350 plus? We'll see how that shakes out, right? And I do believe there's a potential of Amazon making another run. And I actually think, I don't have any money invested in the stock as of right now, NVIDIA. I wouldn't be surprised to see NVIDIA make another run into the 550, 600 range. We'll see, but I wouldn't be surprised at all. I think the more time ticks on, the more these fund managers are going to realize the story of NVIDIA, run the numbers, and the more you're going to realize NVIDIA is not trading rich. It's at a 30 PE, 30-ish forward PE right now. How can you say a company is trading rich at a 30-something forward PE? That's what Apple and Microsoft trade at. The difference is Apple's business is going in reverse. They have declines of revenues, and NVIDIA is growing 100% plus. So you have two companies trading at the same valuation. One company's growing top line 100% plus. The other has revenue shrinking. Tell me who's the more valuable company. Go ahead, try to make that debate. Okay, you can't. Apple's about to raise price significantly on the very highest end iPhone. Now, it's kind of, the more I thought about it, I'm kind of like, because at the end of the day, there's a certain amount of individuals that buy the highest end iPhone every single year. regardless. They just buy the newest, the newest, like highest end iPhone. And the reason being is they want the best. And so there's many, like even tens of millions of people out there that do this every single year. They want that highest end, biggest iPhone. And so Apple's basically saying, you guys got so much money that you're going to buy these phones, even if it is an extra $200. We'll see if that actually happens. But that's Apple basically saying, it doesn't matter. If you're a business professional, if you're somebody that's got money, you're buying the newest, highest end iPhone regardless. Even if we go up $100, $200 on that, you're still going to buy it. We'll see. But that's what Apple's kind of up to there. So rather than raising on the low end, they raise the very highest end possible. Remember the two biggest things that have mattered in the market the last month or so. Both those things came in way better than expected, right? One was NVIDIA earnings. NVIDIA earnings smashed expectations in terms of the current numbers and the guidance. So that took the whole boogeyman out of the market of, NVIDIA's numbers are not going to be there and blah, blah, blah. And the whole market's going to come crashing down. They just, not only did they take that out, but they took it out and then they said, like, things are going to be way better than anybody had forecast, even the biggest bulls on Wall Street, right? Then you have Jackson Hole happen, and it was nothing that we didn't expect. Everything that happened in that was expected. Very different than a year ago Jackson Hole with Jerome Powell, where it caught everybody off guard and they're like, oh my gosh, the Fed's serious. They're actually going to raise rates substantially and they're going to keep them there up for a time. This Jackson Hole was pretty expected. So to get the market to take another huge leg lower, you need something new to happen that would be really devastating, right? That's where things, your whole case around trying to get this market a bunch lower here in the short term is tough. Think about this for a moment. If you're way behind the market because you were way underweight stocks, right? Then how do you get the performance to catch back up to the indexes? I'll tell you exactly how and exactly how they're investing. They're going out there and they're buying the growth stocks. They're buying those NVIDIAs or those AMDs or the Teslas or whatever, because those are the ones that are seen as catch-up plays, right? Because they're usually, if the market does well, let's say the S&P 500 goes up 5%. 5%. Well, guess what? Tesla's going to go up a lot more than 5% usually. NVIDIA is going to go up a whole lot more than 5%. AMD is going to go up a whole lot more than 5%. Meta and all of the rest of them, right? That's how the stock market works. Like those stocks are almost like call options on the stock market in general. So that's where a lot of these folks funnel money, because they're saying, I've got to play catch up. Not necessarily I've got to put my money in the safest place possible. That was more of their view last year. And that's why they sold all those stocks down 50, 60, 70, 80%. They couldn't wait to sell them to anybody buying. And they funneled into their oil and gas stocks and their whatever else they were buying, industrials, whatever, okay? Commodity plays, just sideline money. And they sold, and they sold, and they sold relentlessly. And now they've been playing catch up. And so a lot of these folks put money into those same stocks that they were selling last year, but those stocks are now 100 or 200% higher, right? But they don't care. Because at the end of the day, these folks are just looking at it as, I got to look good to my clients. That's all they're looking at it as.